The JSE and Rand are expected to pair losses today after struggling to obtain gains in the previous session. Local markets closed in the red yesterday, weighed down by losses in insurance and in banking sector stocks. Let's take a detailed analysis of the latest market moves with Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela. Good morning, and thanks as always for your time. And you know the drill. We kick off with a mirror of the markets this morning. What are you seeing?
You know, fortunately, we tried to open a little bit higher. That's after closing flat yesterday, and it's all because we see that there's been a pause when it comes to the dollar rally, and I think that is also benefiting the rand itself as it is now below the 19 rand level, and also because that we've seen some bit of retreat when it comes to the bond yields. That is also helping our stocks. So we hope maybe it will continue like that, and we'll continue to trade in the black.
So BHP has published an operational review, Makwe, for the 9 months ended 31st of March 2024. What do those numbers tell us about the state of operations for that miner?
You know, solid performance coming from them if you look into the likes of copper, iron ore, and also energy coal. But because of bad weather, the guys had to change or cut their guidance when it comes to metallurgical coal. If you look into the copper production, it's up nicely 10%, the iron ore production up nicely 3%, and the energy coal up nicely 5%. But the metallurgical coal, because of the bad weather, has been down by almost 13%. And when it comes to nickel, because of the falling prices, the guys, they don't have much of a choice but to start to reevaluate their options when it comes to those operations, because prices are no longer that attractive.
We spoke about Oceana's performance and fortunes before, but it expects its earnings to almost double after a very strong first half performance. What is driving the surge in performance?
You know, and it could have done much better than that, you know, because the overall performance was moderated by the fact that they had some low volumes when it comes to the wild caught seafood. But if you look into the day brooks, the fish meal thereof and the fish oil, the guys managed to increase volumes, and more importantly, they also managed to get better prices in dollar terms. And I guess any business, they want themselves in that kind of a situation. And we know when it comes to the Lucky Star that it continues to be one of the affordable proteins out there, and the guys also managed to increase their volumes, and the guys now, as a result, they expect their profits, the headline earnings per share, to go up by almost 99%.
You talk about one of their seafood products. I mean, I don't want to give the brand too much airtime, but we all know what we can do with tin fish. I don't know what your preference is, but I can think of a dozen recipes off the top of my head. Maybe you and I will talk about that a little bit later, but yum, yum, yum. Financial services, though, financial services group Old Mutual could see an outflow of customers after amending the wording of some of its insurance policies in response to load shedding and climate change. I wonder how that's going to go down, but tell us more about what the story is there.
I guess number one is not fair what they're doing. We all need to realize that you insure you are whatever that you need to insure, and as you pay those premiums, the guys invest the money, and as you don't make any claim, that's their money, you have lost it out. It's unlike some retirement annuity or so. So in the previous instances, stuff like load shedding, bad weather, people were paying for that as part of their premiums, and people didn't make any claims because there were no events that led to all that. But now, since we started to realize that we've got load shedding, and then we've got claims related to that, we've got bad weather as well, then the claims continue to go up. So the guys don't want to come to the party because they had their own good days because people were not making claims against it. But now, because people are making claims, they feel that it's not fair for their profits. And yes, by all means, they're into a business of making money, but not at the expense of consumers. As we are talking now, if you want to continue to have those benefits, it's either you have to pay more or maybe try to increase your access. And the point here is, if there was a time when guys were making good money because people were not making claims, then I think they should have the guts to stand to say that now, unfortunately, we have to pay those claims. I mean, if you look into the Old Mutual Insure, the claims I mean, they paid almost 5.1 billion. Now it only increased to 7.5 billion. So that is making them uncomfortable. But yeah, fortunately for consumers, they have the option either to stay or to look into another insurance.
And we know, Makwe, and we've seen this happen before, we will have to see what the numbers actually say, because there could be a lot of anger, a lot of discomfort, or dislike even for a brand or a service provider, but it ultimately may not always translate into a mass migration. So I'll check back with you later in the next set of financials on how this is all kind of playing out on their bottom line. Makwe Masilela, thank you very much for talking to us. Appreciate your time.